Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zegel. We get a lot of questions on Social Security. So we thought it'd be best to lay out a series of videos going over the basics of Social Security, but then also some planning items and some more detailed items that you should know. So this is the first video and podcast in the world of Social Security and addressing all the questions that we get. So let's dive into the basics of Social Security so you can understand what the heck it is and where this Social Security benefit is coming from for you when you are planning in retirement. Social Security was started under 100 years ago. It was in the last century. It kicked off, I guess, just under 100 years ago or so. And it provides some protection for not only retirees, but also those with disability and those who have had spouses that pass away. A lot of people think of just the retirement benefit, and that is absolutely the biggest piece, but there's other benefits built in as well in terms of disability and survivor benefits. And there's also a spousal benefit, which we will get to, but that spousal benefit is also for retirement, as long as everybody's still alive and able to collect the Social Security benefits. Now, how is this funded? Where's the money coming from? Now, we're not going to get into all the details of the government accounting of this thing, but it's important to note that the funding comes from payroll taxes. If you're working somewhere, you'll see a line on your paycheck and on your W-2 that talks about Social Security tax. And commonly they're called FICA taxes. That's where you're going to see Social Security and Medicare. But Social Security is in there, and you pay half of that, and the employer pays the other half. If you're self-employed, you get to pay both sides. You get to pay both the employer and the employee side. But in all cases, this is funded through payroll taxes. Now, who's eligible for this? Well, you're eligible if you have at least 10 years worth of work. In government terms, that's 40 credits. A credit being a quarter of a year worked. It's kind of a goofy way to think of it, but if you have essentially 40 quarters worth of work, it doesn't have to be continuous. If you have 40 quarters worth of work, or essentially 10 years in total where you've paid into the system, then you qualify for the Social Security benefits. Let's take it a step further and say, when can you start collecting retirement benefits? Well, the minimum age is 62 and the maximum age is 70. And there's some goofy rules where 70 isn't exactly the maximum, but for purposes of this and to keep it's very simple, 62 is minimum, 70 is maximum, and full retirement age for most people now is age 67. There was a period of time where it was phasing up to age 67. Now, for all intents and purposes, full retirement age is sitting right at 67 until the government changes things. What does full retirement age mean? That is where the calculated benefit for you exists. You get less if you start taking it before full retirement age, but you can get more if you wait to take it until after full retirement age. So if you're full retirement age 67 and you start taking it age 62, 63, 64, anytime before age 67, you're going to see a reduction in your benefit. If you wait until after age 67, you're going to see an increased benefit, essentially 8% per year every year you wait. So you are foregoing a couple of years of income. Let's say if you wait from age 67 and start taking it at age 70, you forego 3 years of income, but then you get a higher benefit amount in the years after that. So there's no right or wrong answer here. In a lot of cases, it does pay to wait, but that is not in any way 100% the the case. That's not 100% of what people should be doing by any means. You could have health issues that are going to limit your lifetime. You could have cash flow needs where you need the Social Security earlier, so you'll take the reduced benefit. You could even just be concerned about the government reducing benefits later, and you want to take the benefit right now instead of waiting. There's plenty of reasons not to wait until age 70. But if you, let's say, have a history of longevity in your family, you don't have any major medical issues, things like that, it can definitely pay to wait until age 70. But we're not going to dive into all that. That's for the future videos in this series. We're going to talk a little bit more about planning. For now, just understand that 67 is the full retirement age for almost everybody now. We're pretty well phased in to age 67. The minimum is 62 and maximum is 70, with a reduction in the benefit if you're taking it before 67, and in addition to the benefit if you wait until after age 67. So those are some of the basics, the very high level of where is it funded through FICA taxes, through payroll FICA taxes, where you pay half and the employer pays half. Unless you're self-employed, you get to pay both. You have to have at least 40 quarters worth of work in your lifetime, essentially in total 10 years worth of work. And we have to understand that we need to wait in order to claim it till at least age 62. And the longer we wait, we're foregoing years of receiving benefit, but we can get some extra additional monthly benefit thereafter by waiting. Those are some of the basics. We're going to dive a little bit more into details and strategy in the next couple videos.